Thanks for tuning into Bell Potter. Well, investors are increasingly looking for businesses that are profitable, with consistent earnings, headroom to pay dividends, and that have low debt. With us today is Ingenia, INA is their ticker code, a company that meets all of that criteria, and its shares have gone up 690% over the past 8 years. The CEO of Ingenia, Simon Owen, is joining us now. Simon, thanks so much for your time.
Jess, it's great to be here.
So start off with an introduction to Ingenia.
Yeah, Jess, Ingenia really straddles three parts of the domestic property market. Firstly, we have a large portfolio of seniors lifestyle communities. So these are effectively land lease communities where we sell the incoming resident the home, we retain the freehold ownership of the land, and we collect a weekly rent from the resident for the right for them to have their home on our land. Secondly, we own a large portfolio of seniors rental villages where we own the land and the buildings, and we have around 1,300 residents who live in our communities across Australia. We also have a large portfolio of holiday parks, particularly located in coastal markets across New South Wales and Queensland. So predominantly we're a rent collection business, but we also do have a development business where we're building the new homes to sell to residents, and that's also a very important part of the way we create value for our security holders.
Ingenia has been growing its rental income and dividends consistently for the last 8 years. What else should investors know about your current position?
Yeah, just look, we went into the COVID crisis with a really strong balance sheet. Our gearing was well below where the banking covenants are. We made the decision in late April to raise an additional $150 million of capital through an institutional placement, and that was really strongly received. And that capital, in the short term, brings our gearing, our leverage down to below 10%. But it was really the capital was raised to fund future acquisitions because we are in the early stages of seeing some market dislocation. So Ingenia is predominantly a rent collection business, and most of the rent we collect is underpinned by government pensions and the Commonwealth rent assistance. We also have our development business, which is very steady and predictable and creates valuable new rental contracts. And our holiday parks, is highly leveraged to grey nomads and young families with children. So the rent collection side of the business has performed very strongly through COVID. And now with the imminent opening of holiday parks in both New South Wales and Queensland, we do think the near to medium term outlook for Ingenia is very strong.
COVID-19 has indeed been really tough for a lot of people, but how has business been for Ingenia?
Yeah, look, I mean, COVID's unprecedented, but our business has held up very strongly through this period. Around 30% of our rental income comes through from our seniors living business, and those rents are underpinned by government pensions and the Commonwealth rent assistance. And since COVID, we've continued to collect 100% of our fortnightly rent roll. And I can't think of another commercial property class in Australia, whether it's industrial, office, shopping centres, we're not being required to offer any rent deferrals or anything like that. So we're continuing to collect that rent, and that's that really underpins the business. It's true that our holiday park business, we did have to shut that at the orders of government just before Easter. And that has had a big impact because during the month of April, we missed out on the school holidays and Easter. But fortunately, our holiday parks are now able to open in New South Wales from 1 June and 2 weeks later than that in Queensland. And based on the bookings that we've been inundated with in the last 3 or 4 days, we expect that holiday parks business, which is highly leveraged to grey nomads and young families with kids, to bounce back very strongly. And then the third part of our business, which is our development business, where we're building and selling new homes to seniors and then collecting rent because we continue to own the land on a freehold basis. Now that has slowed down a little bit, but we're looking at a very strong pipeline of settlements both for the balance of May and June, and we'll be holding nearly 200 contracts and deposits moving into the first half of FY21. So again, we're seeing real resilience in that market. And in our seniors housing model, we're really aiming at the the bottom, the lower end of the market where there's a lot of resilience. So overall we have had a few setbacks, particularly in holidays, but I'm very pleased with the way the team's pulled together and the overall business has performed during COVID. But I think the other key point that I touched on before, Jess, is that Ingenia entered the crisis with a very strong balance sheet. We subsequently raised another $150 million through an institutional placement, and that's brought our gearing down to below 10%, and that's going to position us very strongly to take advantage of market dislocation as we move forward over the next 6 to 12 months.
And just lastly, what should investors know about future growth opportunities?
Well, firstly, we have an incredibly strong set of organic growth opportunities within the business. So we're currently developing 12 communities. We have another 2 scheduled to start in the next 6 months. So even in the absence of M&A, our growth pipeline is incredibly strong, and we have the largest development pipeline in the manufactured housing sector, and it's actually larger than our 2 biggest peers combined. In terms of acquisitions, we're really firmly focused on existing stabilised communities in key coastal and capital city markets on the eastern seaboard. We'll be announcing our first new acquisition next week. We're just finalising that at the moment. We're also looking to acquire some existing holiday parks and potentially option up some additional development land. What we're seeing at the moment is that a lot of our competitors, the groups that we compete with to purchase either stabilised communities or land, they're now exiting the market. They've got to contend with their own balance sheet issues, or their banks are putting them under pressure, or they're just battening down the hatches because of market conditions. And I think with our strong balance sheet, our track record in originating and closing on deals, we do think that the more affordable end of the seniors market is going to rebound very strongly coming out of this. That given the capital we have access to, that's going to position Ingenia very strongly for the next couple of years of really exciting earnings per share growth.
Simon Owen from Ingenia, thank you so much for the update.
Jess, as always, it's great to speak to you.
And thank you for watching. For more information about Ingenia, head over to Bell Potter's website or speak to your advisor.